Hey guy, your girl Sue here once again. This one excites me. Tonight, we're digging into one question: how SoFi used to make money from crypto and how that same engine could scale now with a much bigger member base and a friendlier, more mainstream crypto landscape. No hype, just numbers you can screenshot. First, the quick truth about the past. When SoFi offered in-app crypto trading, it earned mainly from small trading markups inside SoFi Invest and a revenue share with execution and custody partners. It did not break out crypto as its own line, but we do have a guidepost. In a late 2023 quarter, all brokerage fees, that's stocks plus crypto together, were roughly $6 million. Translation: crypto was a small single-digit million contributor then. It was a feature, not a top 5 business. So what changes when you pair that playbook with today's scale and acceptance? Start with the audience. SoFi sits around 11.7 million members and 17.1 million total products. Even if a small slice of that audience touches crypto, the math compounds fast. Let me give you 3 clean scenarios built on conservative, industry-typical assumptions. Scenario 1, low adoption. If just 1.5% of members become active crypto users, that's about 175,000 people. And each trades about $400 per month, with SoFi keeping a 0.6% fee share. You're looking at roughly $5 million in annual trading revenue. Add a tiny $3 per user per year from custody and activity splits, and you reach about $5.6 million total. That already matches the old contribution when crypto was niche. Scenario 2, base case. At 3% adoption, about 351,000 active users, trading $700 per month, and a 0.9% fee share, annual trading revenue climbs to roughly $26.5 million. Layer a modest $6 per user from custody and activity, and you're near $29 million total. Scenario 3, high but reasonable. If adoption reaches 5%, around 585,000 users, trading $1,200 per month with a 1% fee share, trading revenue alone approaches $84 million, and adding $10 per user for custody pushes the total near $90 million per year. Here's why these numbers are more realistic now than they were a few years ago. Mainstream acceptance has jumped. Spot Bitcoin exchange-traded funds and broader media coverage make basic exposure feel normal to many retail investors. Friction is lower. Recurring buys, simple user experience, and partner custody mean most people never touch a hardware wallet. And regulatory clarity has improved enough that SoFi can keep crypto off the bank balance sheet while still offering it through a compliant partner model. Let me give you a sensitivity quick math you can use on the fly. Every half percentage point increase in adoption at $700 monthly volume and a 0.9% fee adds about $4.4 million in annual trading revenue. Every $100 change in average monthly volume at that same adoption moves annual trading revenue by roughly $379,000. So what do we watch to tell if this engine is really turning? 4 things. Active crypto users as a percentage of total members. Does it pass 2 to 3% in the first year? Average monthly volume per active user? Does it settle above $600 to $700? Blended fee share after partner splits? Can it hold near 0.9% without hurting experience? Custody and activity revenue per active user? Does it rise towards $6 to $10 per year as balances stick? Finally, a reality check. This is not a promise for straight up. If adoption stalls below 1.5%, or if average monthly volume sits under $400, or if fee share compresses toward 0.5%, the revenue impact drops back toward $5 to $6 million a year. Good, but not game-changing. The upside lives in moderate adoption with clean execution. That's the whole thesis. SoFi used to make a little from crypto because the base was small and the world was early. With millions more members, higher acceptance, and a partnered, compliant approach, even cautious assumptions point to mid-single-digit to high tens of millions each year, before any new crypto-enabled features beyond simple trading. Drop this word, SoFi Crypto, here we come, in the comments. As usual, no drama, just the numbers. Always remember this is for educational purposes only. Always consult your financial advisor. Ciao. Safe trading and investing.